Opinion coming in, but let's talk about the big global market cue that we're all tracking. The two-day FOMC meeting will begin today. The central bank is widely expected to raise interest rates by another 75 basis points. But remember, after the U.S. August CPI came in a tad above expectations, some economists are now also forecasting a 100 basis points hike. Remember, Fed Chair Jerome Powell in his Jackson Hole speech had pledged that the central bank will use all of its tools forcefully to attack inflation. He had also added that higher interest rates are likely to persist for some time. In fact, staying with the Fed, the expectations from the FOMC, let's listen into some important opinion. This comes in from a former Vice Chair of the Fed, Roger Ferguson, as well as former PIMCO Chief Economist Paul McCulley.
Fed needs to continue to execute the strategy they've laid out. I think 75 basis points is the more prudent move this time. And I think they have to signal in their, what's called their SEP, the Summary of Economic Projections, and also, very importantly, what Jay Powell has to say in the press conference, that they're going to stay on that path. They cannot be dissuaded. And that is because I think inflation is the clear and present danger here. And I think they have to be prepared, and we have to be prepared for what Chair Powell called, which is some pain, i.e. hopefully a short and shallow recession. But getting inflation under control is job one, and moving methodically up this time 75 basis points and indicating more to come, I think is a better approach.
What's the terminal rate going to be, and how long are they going to stay there? And the marketplace has moved a lot since Jackson Hole and also since the CPI data. So you have a lot of nastiness already priced into the marketplace. And the issue really going forward is, at what point will we see the Fed say that they're going to slow this down? What point are they going to start talking about the notion that we're going to reach a point and stay there for a while? And then the issue for the equity market is going to be whether or not it's going to be a softish landing or a recession.